With everything that has already happened in 2020, you would hope that the bottom is in and hopefully you have a strong economic recovery that would continue. But if you are looking at the very limited statistics shown by government and what is generally understood, you will not see the real deal. The worst is certainly to come, and that should be common knowledge. It's a step-by-step process. The retail stores, the malls, the vacancies, the food banks, the layoffs, the moratoriums, the decimated industries, it has only just begun. You came here for the truth, so let me unveil that for you. I've got a jam-packed video for you today. We are going to get into the store closures. We're going to talk about the moratoriums. We're going to talk about the layoffs. I want to talk about everything that's really led up to this point. I've got a lot of information to cover. Some of the things I'm just going to touch on really quickly. Others I want to spend a little more time on. Let's go. Here's an update. CoreSite on the retail stores as the closures have been taking place. They have collected the data. I showed you this all throughout last year. Right now, we are already at officially 8,000 store closures. Openings have not budged. All of that, remember, was from the very, very beginning of the year. And I'm sure very few, if any of these stores have actually opened because this is the announcements. That's based on the announcements. That's 3,300. It was like that at the beginning of the year, and you could see that the closures have started to mount, but the openings haven't budged. We know what's going on here. A lot of this has to do with a big change that has accelerated, a process that's accelerated here in 2020 for obvious reasons. But that trend was in before. We knew that. However, if it doesn't happen in a period of time in which people can catch up to it, then you have a lot of layoffs that will persist. It's not as if, look, nobody's going to be riding horses when you've got cars around. I get that, but that transition didn't happen overnight. It didn't happen over a few years. It took a period of time, right? Well, you have people who can gradually get into a business, get into an industry that will obviously be there in the future. But if it happens suddenly, it's not going to be giving them an opportunity to catch up. Okay, now this article here out of the Wall Street Journal, it's interesting. If you want to read about the personal side of it, I mean, I'm not going to get into it. It's just unfortunate to see what has happened to a lot of people. They're left out of work, and unfortunately, they don't have any money. There's different situations going on with that. I just talk about the economic side, okay? Whatever you look at and whatever the opinion side of it, that's a whole different story. I just look at the economic aspect. I look at the data. Look at this. More homes are going dark as moratoriums on utility shutoffs end. Utility companies say that they can't afford indefinite halts to shutoffs without raising prices for all customers. So everybody is going to have to pitch in at this time in order for these companies to remain operational. I bet most individuals didn't even think about this. You know, these companies here, they haven't been getting their payments, and for sure, some people, they probably could afford to, but for one reason or another, decide to keep that money aside for this period. But this isn't a good thing over the long term because if somebody, if they're not paying for 6 months, for 9 months, for 12 months, and now suddenly the moratorium ends, they have a huge backlog that they need to pay. And if they were unemployed through that period of time, I'm sure their bank account isn't bursting with cash. This right here is huge. This is a chart that corresponds to that. Lights out. Many states put moratoriums on energy providers cutting power to homes, but now some have expired or become voluntary. In the next 30 days, roughly 80 million households, read that, 80 million households will be without such protections. So that gives you a breakdown if you want to read it for yourself. But there are many things that will be put in place to protect people, but not everywhere. And it still does not fill the void. There are so many reasons why we should be concerned today say about the economic aspects here. Think about on a mortgage on a home, right? This home has a piece of paper that's attached to it. It's called a mortgage. And of course, if people aren't able to pay that debt on the mortgage, what happens? Because you have a bank, a lender essentially, that is really the one that owns this piece of property, and they are simply putting that piece of paper in between. It is a product created for this industry to make a lot of money over a long period of time. But if suddenly they're not getting the income from that mortgage, it presents a very big issue for that lender. I know many people would say, well, who cares? But if the lenders have problems, they're big employers, they start laying people off, their buildings no longer need to be there. That puts further pressure on the commercial mortgage-backed securities, all of the operators inside these buildings. The need for future expansion isn't there. So suddenly all of the construction positions are not as required. What about the maintenance on these properties, the tradesmen that are involved? Everything is affected by this, and it all comes down to something as simple as this. But if you're not willing to take those steps and look at what happens step by step by step, you're never going to see it. If you look at the unemployment rate, you saw what happened. All these people started getting laid off, and then, okay, well, it's getting better. By the way, that's the U3 unemployment rate that they provide. Well, of course, you've got an issue today that is simply going to be resolved by taking the actions of adding more debt on top. That's what they're saying. I mean, it's hilarious after saying it. I mean, it makes me laugh, but this is really what they're all doing. We have a huge crisis. I just pointed out why this is a big problem. You can see ahead, look 6 months down the road, look a year down the road. But all they do is they keep pointing to this, the job situation, the U3 unemployment rate, and they're saying things are getting better. Well, you decide what you want to pay attention to. I bring you the video and you do what you want with it. This article here has been collecting all of these different big companies that have been laying people off. Lufthansa announced on September 21st that it is further shrinking its global fleet and workforce. The airline did not announce how many jobs cut, but it said that it had a personnel surplus, check that out, personnel surplus of more than 22,000 positions. So how many people do you think they're going to get rid of? This industry is not going to get better anytime soon, so we can expect as much as 22,000 positions at this one company getting ready to be axed. At the bottom, they're talking about Raytheon cutting 15,000 jobs. They're involved in the commercial side as well, and yet another company to make the list. Facing a $250 million deficit, the University of Delaware turns to layoffs and furloughs. All I'm noting here is that it affects many different industries. It's not just retail. Job cuts are being planned at the iconic Pebble Beach Resort, while separate layoffs are in the works at Bay Area hotels as well as the Golden Gate Bridge District. So many different industries, so many different sectors, they are all taking a hit, and many have yet to even feel what's coming. Boeing prepares deeper cuts from executive ranks to real estate. This company here, despite Jim Cramer constantly telling everyone to buy it, is taking an absolute beating. I don't know what's going to happen to the stock, but the company here looks like it's continuously getting rid of people. Taxpayers will bail them out, it's fine, but ultimately I'm not sure what the status is for many of their employees. This article here is talking about layoffs that are taking place in the hospitality industry, and I wanted to show you what they had to say. I mean, it's unbelievable. At the top here, this is depression level stuff in our industry, referencing specifically the hotel, restaurant, and casino workers in the Washington region. I couldn't believe this, but more than 9 in 10 union members are still out of work. He wonders if business visitors in particular will ever stream into the nation's capital at the levels that they once did. Have we changed the way that we think about doing the things that we used to do? Do you need to go to a convention center in the city somewhere else to watch a doctor get up and give a presentation in a room of 1,500 doctors? I don't know the answer to that right now. So it's interesting to see what's going to happen in so many different industries. This is an interesting website, layoffs.fyi. It's tracking, as it says here, all the tech startup layoffs since earlier this year. Data is compiled primarily from public reports. It's constantly updated. So if you're interested, you can check this out at any given time. There's also dailyjobcuts.com. This one here shows it in this chart format. It's more specific, but it's all here if you want to check it out. This and all of the others will be in the description under the sources if you want to click on the links. Now this one is quite interesting. Gig economy company launches Uber, but for evicting people. So what they're talking about specifically is this company, Civil, spelled Civvl. They hire these gig workers who will do evictions. A company called Civil says evicting people is the fastest growing money-making gig. Now I don't know if that's true, but this is going to be something that more and more people will be needed for, and that just tells you the seriousness of this current situation. I keep hearing all the time, everything's fine. I don't know what you're talking about. I don't know why you're talking about this. We had a stock market that declined and now it's rising, and therefore everything is fine. Shut up. Stop talking about this. And then you have on the opposite end of the spectrum everything I just showed you and the 3,000 videos before it. There's always going to be pockets. If you look in one area or you look in one industry and sector, it's going to behave differently. It's going to look differently. And so we need to make that judgment. I showed you this, I think it was yesterday's video, weekly equity fund flows. Look how much money moved out. The tech stocks were drained of cash in the short term after seeing such massive inflows. A lot of it was coming from the retail traders, which then of course their data is front run by the Citadel and the high frequency traders. We know that. It completely flipped. I did a video about it and I had multiple people who didn't watch the video. They just read the title and they said, "You're a liar, you're garbage." Okay, sure, that's fine. Here's even more information on top of that. Right now today, there's an extreme amount of individuals, more than we saw at any point during the financial crisis, okay? So at least until 2006. We've never seen shorting like this on the NASDAQ. And it flipped. It was in the complete opposite direction for over a year. And now that just flipped. Why? Because the sentiment was going crazy. It was ridiculous. Does that mean that the market's going to crash tomorrow? Absolutely not. I don't know what's going to happen. But the fact that money completely flipped over is an absolute fact. Here's the same data, but basically, if you look at the blue line, that is the Fed funds rate. What happened last time around, you could see right there, the last time it hit this level was 2006. That's the point in the cycle where interest rates were at their peak. Today, they're at rock bottom. Just imagine what they are going to do to get out of this mess. If the markets start to fall, I think the next hot commodity is going to be underpants. I want to finish off with this. Take a look at this quote. Who's on the other side of the trade that's selling the stocks to me? Since we know that 90% of the trading is done by big institutions, they'll likely have far more information than me. So why am I buying when they're selling? If they don't have an edge over these big institutions, they're likely playing the loser's game, which they should stop playing unless it's purely entertainment, like we go to the casinos in Vegas. I'm presenting that with no comment. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. Everybody that watches the advertisements, that is a huge support, big help. Thank you very much. And all of those donating, really, I sincerely appreciate that. If you want to learn how to sell stuff online for free, you can do so at the AmazonGPS.com. If you want to understand the financial system from top to bottom, A to Z, you can learn everything you need to know in these two books. Check them out at the link in the description. If you want the audiobook instead, themoneygps.com. Hey now, you're still here? Excellent. You want to watch this video if you haven't already? Definitely check it out. It connects in with the one you just watched. Click it. I'll see you there.